Yo, what's going on, everybody? This is going to be a video over how to effectively journal and basically get the most out of journaling, both psych and technical wise. So, I'm not going to waste anyone's time here. We're just going to get right into it. So, this first part where you put the name, I kind of like use this part as like a something for me. Like, I would reference this, like, okay, I'd say like bad example or like psych example. Kind of like a recap or like the big takeaway from that day, like good trade, bad mental, you get the point, bad risk, blah blah blah. So, but like good example. And then obviously we have the RR. You would just pick, whatever RR you got. The profit, obviously you have a loss, profit, break even, or a tape read, pair, NQ or ES. That's pretty self-explanatory. Then win, loss, break even, you get the point. Actually, this should be. Actually, no, that's the same thing. Um, and then the entry. So this is where like there's actually like some importance. So MEC, PDI, ABS, these are mine, or well, what I use. ABS is like my sole model, and then these are the ones used in PB. And then including this continuation, is it a 5 minute gap or a 15 minute gap? And then this is where it gets very important. This is where like classification and filtering comes into play. This is where you get the most out of journaling. You would want to pick the type of time frame inversion. So if I have a 5 minute inversion, let me go back to it. If I have a 5 minute inversion, whenever I go back through my journals, I can go here, click the filter button. Oh, it was actually already clicked. I put on a entry one. Where's that at? Oh my god, am I blind? Oh, I think I already. Oh, yeah, I already picked. And then I can pick my 5 minute gap, and then guess what? It shows up if I want to check a 3 minute. Obviously, I don't have a 3 minute, but then you can actually go through your examples, see where you excel at, see where you're kind of struggling at, and then tune your trading to that. How you actually adapt and improve. Like that is what effective journaling is. And then obviously time of entry. This is just more data. So, all right, I'm seeing that I'm losing a bunch at 10:30, 10:45, like 10:50. Okay, maybe I don't do the best during like end of session or like end of 9:30 to 11. But on the other hand, I see like at 9:47, 9:37, like 9:50, blah blah blah, all those times I perform really well. So you could adapt and make it effective journaling by noticing, okay, I struggle at the end, but I perform really well at the beginning. So I'm gonna just trade the opening start, or like the start of opening price. My bad. Like for the first 30 minutes, maybe for an hour, because that's where I do best at. And that's how you would obviously adapt. And then deal well. So obviously this is green. You want to be aligning yourself with the high time frame deal well. And then red is obviously you don't want to target high resistance liquidity. And then these are just obviously all the types like engineered highs and lows, swing highs and lows, like if it's just a regular swing. Equal highs, failure swings, external range liquidity, blah blah blah. Like let's say you've engineered, but then above all the engineered you have ERL and you target both, then you can put that like I did here. And then like relatively equal highs, I'll go and put that over there. And then imbalance. So just all your types of DOLs. And then this is also super important again for that filtering aspect that I went over earlier. That applies to the DOL as well. But of course the ratings. So you really do want to be rating your setups inside of your journal for this filtering aspect. Because guess what? Whenever I want to, go through all of this, let me click my ratings right here. If I want to see all my A setups, then I'll know what they look like. I'll know what my B setups look like. I'll know what my B plus, and then my regular Bs, my Cs, whatever, and then your Fs. Obviously, this is A plus, but yeah. So like that's just really good. That's how you effectively journal and like remind yourself of, okay, this is what that looks like. And now these photos I just like threw in there. This would be like your low time frame setup. Like I'll actually go ahead and put this to low time frame. And then high time frame, yeah, because this was high time frame. So this is a random photo, but obviously like this is like the 1 minute chart. This is what the low time frame looks like, and then this is what the high time frame looks like. Completely different setup, by the way. I just put random ones, but like this would be your 1 hour chart, and then you could identify that as such, just so, like you not only get an idea of the low time frame framework, but where you perform well on these high time frame charts. Look how noticeable this price action is. Yeah, we inverse this gap, but then we get a bullish run up, react off here, inversing these gaps, running up, and then obviously these are not the same examples, but they're both bullish. And then the same thing here, really good targets. We hit the gap, inverse, bullish again. So they have some aligning features like being bullish, but yeah, you get the point. And then obviously the date, that's super just self-explanatory. And then the day. This way, again, you can go through the filtering, see what days you perform best and worst on. Just more of that filtering process. And then at the very end, this is going to be the final part. It's going to be your psych, the why, and what can I improve. The psych is obviously just emotions. I completely botched typing that. Low-key got to gain back my aura, even though I botched it again. But yeah, so you just write down how you felt, like, okay, did the trade affect me a lot? Did it not? What were my emotions before, after, blah, blah, blah. Kind of just like a recap on what you felt. And then the why. This is like, okay, why are we delivering to this liquidity pool? Well, if we go back here, it's like, okay, why would we deliver here? Well, okay, we swept out liquidity and we filled an imbalance. So there's no real reason to go lower. But if you look to the buy side, there is a reason to go higher. There is a bunch of resting liquidity, open imbalances here. There's probably a higher time frame draw higher, and we have a little bullish market maker model set up. So no reason to go lower because imbalance is mitigated and liquidity is swept, and the buy side has open imbalances such as here, probably more on the high time frame, and then easy liquidity to run to. So very good. And then that would just be my why. And then what can I improve? Well, that's up to you. And that is it. I make this super simple, bro. Like, this is the best way to journal. The main takeaways that I want y'all to have from this video is utilizing this filter aspect and training your eyes, your two little eyeballs. That's what you need to be training, because then you'll just visualize this on the charts. You'll see the high resistance, you'll see the low resistance through these journaling methods. And then of course, like, make sure like you're marking out all of this, seeing how your RR performs, the time of entry, like those little data points that you can just pull out of trading. Like, okay, this is the time I'm most I perform best at. I'm just going to trade more at these times. I'm going to put more risk on at these times. And that's how you can adapt. And then you'll see, like, in certain seasons of the market, because there is seasonality to it. Let's say like your best time of entry is really early in like Q1, Q2, but then you notice like, all right, we're getting towards like the winter months, kind of end of year. Okay, my best entries are coming after, 10:30, 10:15. And that could be like, okay, market is accumulating. There's less like volatility because like we are at end of year. You'll see that a lot with December because that's something I noticed as well. But yeah, so like there's even adaptability in that sense. Like throughout the entire year, you could be a really good trader at the beginning of the session and a really bad trader, and then it completely flips at the end of the year because that's how the markets are. But you have to be adapting, and that's why these journals are so important. Anyway, not gonna yap anymore. Hope y'all enjoyed this video, and if you didn't, I don't care. Dead ass.